Today, I want to share an all-inclusive guide to one of the most popular indicators on the planet, the moving average convergence divergence indicator, otherwise and more simply known as the MACD indicator. Now, just like other indicators, the MACD is not some holy grail of trading, and if used improperly, it can lead to false signals. It can lead to losing trades and possibly even blown accounts. But if you use the MACD correctly, it can help you to create some extremely profitable trading strategies and very high probability trading opportunities that can lead to profits for years to come. And that is why in this video, you're not only going to get a full guide of what the MACD is, but I'm also going to show you how I use it in the most profitable ways. And later in the video, you're going to be learning a full profitable trading strategy using the MACD indicator. This way, you can go away from this video with the ability to conquer markets using the MACD. So if that sounds good, go ahead and smash that like button for me. Go ahead and subscribe if you are new and click that notification bell. While you do that, I'm gonna let the intro and disclaimer roll, and I'll see you guys directly after. Welcome back, and let's go ahead and get started with what is the MACD. The MACD is known as a trend following indicator. It can help us determine the underlying trend of any asset that we're looking at. On top of that, it can also be used as a signal to buy or sell. Now, we're going to talk about how to do those things with the MACD a little later in the video, but for now, since you know what it is and what it's used for, let's dive into how it actually works. On the screen, you see the MACD. That's what this is here. And if you're on TradingView, it's very easy to find. Go to Indicators, type in MACD. It will be Moving Average Convergence Divergence. Click that, it'll be plotted on your chart. Now, this indicator is composed of two lines and a histogram on most trading platforms. So with this being the case, let's actually double click this. The first line that the MACD indicator has is called the MACD line. We also have something called a signal line, and we have our histogram, right? But the most simple form, let's go ahead and do this, is the MACD. What is this line? What's the math behind it? The math behind the MACD line is pretty simple. It's just the 12 EMA minus the 26 EMA. That's how we plot this line, or how the indicator plots the MACD line. The next line that we have on the MACD is the signal line. The signal line is very simple. It is nothing more than a 9 EMA of the blue line, or our MACD line. So it's just meant to smooth out the MACD line by being a fast moving average that's based on the MACD line. And as you can tell, that's exactly what it does. It's just a much smoother line than our blue line. Now, next up, we have the histogram. The histogram on a MACD is just showing you the distance between the MACD line and the signal line. The larger the histogram, the more space there is between the MACD line and the signal line, and the closer we get to a cross, the smaller the histogram becomes, and upon the cross, we will see a switch from green to red, or vice versa in the other direction, as soon as we get a cross between our signal line and our MACD line. So the histogram is there to show you the distance between the two lines, as well as to make it more visually easy for you to see when a cross actually occurs. So now hopefully you have an idea of what the MACD is and how it works. What we're going to do now is dive into how we can actually use the MACD in our trading. See you there. There are three main ways that we can use the MACD in our trading. We talked about them a little bit earlier in the video, but the first way is to help us identify the trend of a particular asset. The second way is to help us find buy and sell signals. And the third way, which we have not discussed at all yet, is to use MACD divergence in order to spot possible reversals. Now, we are going to dive deep into each of these. But before we do, please understand that even though all three of these things can help us predict market moves and create more accurate trading opportunities by themselves, these things are not going to equal $1 million in your trading account next week. Just like with any other indicator, the MACD is there to help provide more confluence to other factors that we have going in the correct direction to either sell or buy in order to make more accurate trading opportunities. So keep that in mind as we move forward. But let's go ahead and talk about how we can use the MACD indicator in confluence with other things in order to help us identify the trend of a market. So the MACD indicator, outside of the two lines and the histogram, has something called a zero line. Now the zero line may or may not actually be on the indicator. As you can see right here, I've actually put a black horizontal line here for the zero line, but your zero line will be where the histogram starts, just in case there's no line on there. Essentially, in combination with other factors, if the signal line and the MACD line are both above our zero line on the MACD, then that market is considered to be in an uptrend, and vice versa. If the signal line and the MACD line are below the zero line on the MACD indicator, then that can give you more confluence that a particular market is in a downtrend. Just to give you an example of this, something we would look at possibly is the 200 EMA price needs to be below that for us to consider something in a downtrend. Then we want to combine that with both the signal line and the MACD line being below zero on our MACD indicator as an extra confluence that we are actually in a downtrend. And with those two things coming together, we can start to do things like trade little pullbacks based on candlestick patterns or price patterns in anticipation for this downtrend to continue until we see some type of reversal pattern like a double bottom and price start to trend higher. That is one of the ways that we could use the MACD to help us identify trend. Now we're going to go over a lot more of this. I'm trying to just get you familiar with it at first though. So let's go ahead and move on now to how we can use the MACD indicator in order to find buy and sell signals. Well, the way we can do that, and yet again, without just using this, obviously just using this is not going to be something that provides a tremendous amount of accuracy to your trading, but something we can do is look at the cross of the MACD line, which is our blue line, through our signal line. The direction that that cross happens a lot of times can provide a confluence to a possible entry. In this case, if we look up from here, we have that happening at a peak in price before price continued lower. Now again, just to give you an idea of confluence, because obviously if we traded every time the MACD line crossed, sometimes we would win, sometimes we would lose. We want to have some confluence there to give ourselves the most accurate trading opportunities possible using the MACD. So something we might add to this is scrolling the chart left and only placing trades when we have price pushing up to a major level of structure, then using that MACD line crossing below the signal line as an entry into that trade, stop loss above here, targets wherever you want them to go. So that's, again, just another example. I'm trying to speed through this to get you familiar with how we're going to be using this to create strategies later in the video and to set up some cool trading opportunities a little bit later on. Now, the third and final way is by far my favorite way to use the MACD indicator in confluence with my trading, and that is to wait for MACD divergence. Now, in case you are unfamiliar with divergence, I will do a very quick example of it. Divergence would be if price is heading lower, 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 and the indicator you're looking at, in this case, it's going to be the MACD, instead of making a lower low like we did right here, this low being lower than this low. If this happens on price, and then the indicator does something like this, goes from a lower low to a higher low, that is what we call divergence. Now, the MACD indicator is one of the best indicators I've found to use divergence to help point out possible reversals. Something I really like to do, and a little bit of a hint towards one of the strategies we're going to be talking about, is look for this situation at levels of structure where I'm coming down into a level of support right here. Let's say this was a level of support looking left in the past, blah, 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 blah. And at this point, seeing RSI divergence, then combining that with a candlestick pattern may be a way of creating or actually is, I've already tested this, is a way of creating a really accurate trading opportunity that can give you an edge and provide those profits for years to come that I was talking about towards the beginning of this video. So let's take a look at what this looks like on price. A really good example of this is actually right here. If I scroll up a bit, you can see price. I just thought it would be easier if I drew it out first. But as you can see here, price is coming down to a low Here's that low on our indicator. We have a pullback pushing down to a new lower low. What happens on our indicator? Higher low. So since we have this divergence, which is what we call this, our next step would be to look for some type of entry reason. We don't just want to trade based on this. If we have structure looking left, that's a great confluence to add to our divergence on our MACD indicator. But not only having divergence on our MACD, but you add that to a double bottom, an entry after that double bottom would be a very accurate way to look for possible trading opportunities. So now that you have a good idea of the three main ways we can use the MACD indicator in our trading, I'm actually going to move on now and give you some examples of creating high likelihood and high probability trading opportunities by combining the MACD with trends, by combining the cross of the MACD line and the signal line with different types of candlestick patterns and chart patterns in order to add more accuracy to trading strategies and trading philosophies that are already accurate by themselves. And directly after that, we will take a look at a full rules-based trading strategy that is profitable for me that you can take and test and possibly even use, add to your trading arsenal. That way, at the end of this video, you'll have everything you need to conquer markets using the MACD indicator. See you guys in just a second. Okay, so now we're going to take a look at three separate trading opportunities. And what I want you to do is pause the video and see if you think this is a high likelihood trading opportunity or a low likelihood trading opportunity. Meaning, is it going to be a highly accurate situation to trade in or not so accurate of a situation to trade in? So pause the video, take a look at the chart and see what you think about this specific trade right here. Okay, so hopefully you've done that. I'm going to go ahead and talk you through this entire opportunity. The first thing we want to look at is actually price, not the MACD indicator. As I've said multiple times, the MACD indicator is just going to help us add confluence to things we already see price doing. So in this case, we had price pushing higher. And the best way to do this is going to be with market replay mode, actually. In this case, we had price pushing higher, coming to what? Coming to a level of major resistance that pushed the market down in a dramatic way the last time price was around 1.1478. So with that being the case, we already know we have a major level of resistance here. We see price get to this level. What's the next thing you notice? Well, now instead of just looking at price, we can actually add some confluence by going down to the MACD and seeing the cross. We can either look at the two lines to see the cross, or we can look at the histogram and see that the histogram went from green to red right in here. That is telling us that the MACD is giving us a signal to sell at a major level of resistance. That by itself is kind of a somewhat accurate opportunity. I would not call that an extremely accurate trading opportunity though. But if we let price continue pushing forward, what you will notice is that we also end up with another higher high. If I push this over, almost like a horizontal line, you can see that this wick went higher than the previous wick, making a higher high in price. Upon making a higher high in price, we didn't even get a bump out of the non-EMA or the signal line, but we can see a little bump here out of the MACD line. So with this being the case, we now have MACD divergence at a level of resistance. Now, what did we say MACD divergence does? It signals reversals. So if we had price heading higher, the reversal in this point would be a reversal to the downside. So adding all these factors together, along with the fact that we have a double top chart pattern here as well, in my opinion, equals what I would call a high likelihood trading opportunity, meaning I have very good odds of success by taking this trade to the short side and looking for selling pressure based on these factors. Price is at a major level of resistance. The MACD indicator has crossed the signal line. We have a double top in price action. We have MACD divergence. We see a red candle after the double top to give us indication of selling pressure after all of this confluence. And that is when you want to be trying to place trades based on the MACD indicator. You don't want to place trades just based on the indicator. You want to add all these different confluences together in order to equal the best possible trading opportunities. And in this case, you'll see that it worked out really well here on the euro dollar. And I wish this thing would go faster. I may just speed up the video. There we go. Okay. And we've hit profits. So that is an example of a really high likelihood trading opportunity that we use the MACD indicator in order to confirm and as confluence with the trading opportunity. Let's take a look at two more, then we'll move on to a full rules-based profitable trading strategy using the MACD. So with the next trade right here on the pound dollar 4-hour chart, would this be a high likelihood trading opportunity or a low likelihood trading opportunity? Hopefully, if you paused the video and actually did some analysis yourself, you were able to say very low likelihood. And what's the reasoning? I've removed the histogram to make the signal line and the MACD line easier to see. The histogram has no bearing on this specific trade, so it's totally fine. But as you can see, price itself isn't really showing us a reason to enter a trade here anyway. At this point, we just have a period of consolidation, and yeah, price is back bouncing off of the previous support of this period consolidation, but it's bouncing off of it for the third time. And just like price is making these equal highs and can't really get above this high, the likely scenario, if we get down to a level of support in consolidation for a third time, is that we're going to most likely break through that level because sellers have consistently taken control up here around the 1.4242 level. Now, with this being the case, that doesn't even really have to play a part in the analysis. We're not trying to find a reason for the trade not to work out. We really can't even find a treason. Oh my God. We really can't even find a reason that this trade would work in terms of price. There's no price situation right now that's telling me I should place a buy trade. And if we look down on the MACD, there's also no reason on the MACD to place a buy trade. We're below the zero line, meaning we're in a downtrend. We're not poised for any kind of reversal by being at like a major level of structure. So with those two factors coming together, we also don't have a cross of the MACD line and the signal line. So there's nothing here telling me I should buy. So this would be an example of a really low likelihood trading opportunity. And because of that, price did in fact break below the lows and push down far enough to stop us out here on this trade. So that was just to give you an example of a really low likelihood opportunity as well. Let's go ahead and move on and take a look at one more trade, and then we'll move on to the full strategy. Lastly, what about this situation here on the Aussie dollar? Pause the video for a second, do a little bit of analysis, see if you think it's a good trading opportunity or a not so good trading opportunity. I'm gonna go ahead and break the trade down. Personally, I would see this trade right here as a good trading opportunity. And the reason is because we always look at price first, then the indicator second in order to identify more confluence in a trading opportunity. So in this case, we have price pushing higher. We have a new high compared to the previous high. We have a pullback into that previous high, which happens to be a level of structure that was tested multiple times. I'll show you by doing this right here. Structure is always zones, not necessarily lines. So in this case, we have price coming back to our zone of structure that was tested multiple times. Considering that, we can now look at the indicators in order to provide more confluence. One of our indicators being the 200 EMA. Price is above the 200 EMA, giving us an indication that we are in an uptrend, which is pretty obvious from price itself at this point. But again, we're adding confluence with indicators. If we look down on the MACD, what did we say we needed in order to identify an uptrend using the MACD? We need the signal line and the MACD line to both be above zero. Is that happening right here? Yes, that is happening right here. Both of the lines are above the zero line. So this would be a good trade in my opinion, considering all of this on top of price creating a candlestick pattern right here with our engulfing pattern. Now, again, we're using indicators like the MACD in order to provide confluence. So if you wanted more confluence on this trade, what could you do? Well, you could wait for the MACD line to go below the signal line, like what looks like is happening now, and then for the MACD line to cross back above the signal line, and that cross back above would add more confluence to this trade. You would have to be a little bit more patient to wait on the indicator to catch up to price. But as you can see, pressing play here, that in fact does happen in this situation. So an even more conservative way and even more confluence that you could add to this trade is by waiting for the cross of the MACD and signal line, which happens right around here on our histogram. You can see that, and that would add even more confluence to a trading opportunity like this one. Hopefully now you understand what the MACD is, how it works, and how we can use it to create some really high likelihood trading opportunities in any market. Before we move on to the complete strategy, if you got value out of this video, then it's highly likely that you'll get value out of joining us in the EAP training program. Now, this is not a sales pitch, but I just want to make you aware that we've had a few people graduate, which means there's more space available in the EAP training program, so that is something that's available to you. In this program, I share a complete training course that goes through step by step what I've learned in my own personal trading over the past 10 years. This program also includes a Monday market breakdown video where I send you a video of the currency pairs along with the areas of structure that I'm personally paying attention to for trading opportunities. On top of that, we also send out about 3 to 5 email alerts every single week that are trades I'm actually placing. And the best part of the program is that it's a mentor program, meaning you'll have direct access to me through email anytime you have any questions about trading or about the course. It'll be me personally answering those questions for you, and the program comes with a 30-day money-back guarantee. So if that's something you're interested in, go ahead and click the link in the description or go to www.eaptrainingprogram.com. That link should be on the screen somewhere. If you're not interested in that, it's totally fine too. Just make sure you're subscribed here, and we're gonna go ahead and move on now to a full and profitable strategy using the MACD indicator. So we're actually going to take a look at two separate strategies. One of them is a little bit more rules-based than the other one, a little bit more systematic. This one that we're taking a look at here, it's a trade I'm actually involved in that requires the MACD to have divergence in order to start looking for possible reversals. So in terms of looking for reversals, one of the things that I like to do most is wait for price to be at a level of major structure. So right here you can see that we have a major level of structure. I know you can't really see that yet. Let's go out to a higher time frame, the 4-hour chart. So on the 4-hour chart, you can see that this area is an area that's acted as resistance multiple times. So if I have price coming up to an area like that, and an area like that on a higher time frame, and price is coming up to that area on my lower time frame with divergence on the MACD, then that's giving me a really clear indication that price has a likely scenario is going to head lower and reverse. So with that being the case, let's go ahead and discuss a little bit about this divergence we have on the MACD. As you can see, price is creating higher highs here. This high being higher than the previous high. So we have not RSI, I almost said that. We have MACD divergence here because the MACD is creating lower highs. Hopefully that's clear to everyone. As the MACD is creating lower highs and price is creating higher highs, this is what is known as divergence. When we have divergence coming into a higher time frame level of structure, again, adds confluence to that possible reversal. For selling pressure, I just wanted to see a couple of red candles to see that sellers are trying to take control from this major level of resistance alongside with our MACD divergence. As you can see, I've opened a trade here. I'm actually down about $140 at the moment. And what we're going to do now, just to ensure that you have a good grasp on this specific strategy, is take a look at a bullish version of this strategy right now. I'll see you guys there. For our second example, we're on the Aussie Yen 4-hour chart. As you can see, price is now hitting a level of major structure support. This level acted as major support for the Aussie Yen looking left. It's around 79.19, between that and 78.82. As we push down into this area, I want you to look down at the MACD indicator. Do you notice anything that would stand out to you in a live trading environment or a live trading situation? Hopefully you said yes, and hopefully you pointed out the fact that we have lower lows on price combined with higher lows on the indicator. When this happens, again, this is something known as divergence. And when we have divergence coming into a level of major structure support, we can look to buy that as a possible reversal. Or at least that's what I do in my own personal trading. You decide how you want to trade. That's not financial advice. But in this case, I would look for a couple of green candles to show me that buyers are trying to take control from this area of support alongside with our MACD divergence. And with that being the case, it may be a situation where I place a trade looking at a stop loss below the swing low, a target at about a 1.4 to 1, which is one of my favorite ways to take targets. If we hit play here, you'll see that this trade, in fact, would have worked out in our favor while combining, again, the MACD divergence with major levels of structure and buying pressure to look for possible reversal trading opportunities. Our last strategy is going to be a completely rules-based strategy that uses the MACD to help capture trend continuation. We're going to need two different indicators for this specific strategy. One of them is the 200 EMA, which is the blue line you see on my chart, and the other one obviously is going to be the MACD. For this strategy, I'm going to go through a brief example of it, then we'll look at a few other examples just to make sure that you are completely ready to go test and possibly add this strategy to your trading arsenal. For this strategy, we want to see price trading above the 200 EMA. At the point that price is trading above the 200 EMA, we're going to look down at our MACD indicator. What we want to see from the MACD is that our signal line, the orange line, and our blue line, which is the MACD line, both cross below 0. 0, remember, is where the histogram starts. You can put a horizontal line there if your platform doesn't provide a 0 line on the MACD indicator. When these two cross below the 0 line, we want to see that price continues to stay above the blue line, which is our 200 EMA. So as long as this is all coming together, price is staying above the 200 EMA, we have the signal line and the MACD line crossing below. This is when we can start looking for a trading opportunity. And what we want to see is a change in color from red to green for a buy trade while all of this is still happening. So this change in color, which remember just signals the cross of the MACD line and the signal line, but this change in color must happen while price is still above the 200 period moving average and while the MACD line and the signal line are actually below the 0 line. So if this cross happens up here somewhere while we're above the 0 line, then this is not a valid trade. And if this happens, but we have pushed below the 200 EMA, this is not a valid trade. So now that you know the rules of this, the opposite would be true for a bearish version of the strategy. We're going to go through two examples of this strategy, one bearish and one bullish, to make sure you completely comprehend this strategy. Let's go ahead and take a look at a bullish example now. Okay, so looking at the chart right now, what do we have? Right now, we have price that has just created a new high, putting us into an uptrend or staying in the uptrend we were already in. We can see that price is trading above what? Our 200 EMA. With those two things coming together, what's the next thing we need to see from our MACD indicator? The signal line and the MACD line need to go below 0. Here's our black horizontal line for 0. As you can see, both lines are now below the 0 point. What's next? Well, next we would want to see price continue trading above our 200 period moving average. Then we would want to see a change on the histogram from red to green, or in other words, a cross of our MACD and signal line. Once that cross occurs, that's when we would want to actually place our trade. Looks like the cross occurred on this candle. We would have a stop loss right below the swing low, right here. And for me, as I said earlier, I like targets to be around a 1.4 to 1 reward to risk ratio. We will do that. And let's go ahead and hit play and see what happened here. Price pushed up and eventually did hit targets. So as a bullish example, remember, we're just waiting for price to continue trading above the 200 EMA. We're waiting for our MACD and signal lines to be below the 0 line on our MACD indicator. And we want to see a cross of the MACD and signal line to the upwards direction while we're still below the 0 line on the MACD and while price is still above the 200 EMA on the chart. So that is a bullish example. Let's now go through a bearish example of this, and then we'll take a look at a few of the results I had while testing this myself. Here's our bearish example, and what do you guys see? So right now you can see that price is trading where? Below our 200 period EMA. So with that being the case, we know we're in a downtrend. Price has also created new lower lows compared to the previous low. For extra confirmation, is our signal and MACD line above the 0 on the indicator? The answer is yes. And for a bearish trade, this is what we're looking for. We're looking for these two lines to be above the 0 line on the MACD indicator. What's the next thing we're looking for? We want to see a change in color on our histogram. Does that happen here? Well, yes, we have a cross, and I know that's very small in terms of the change in color. Hopefully you can tell that's red. If not, when you hover over it and look over here, you can see a red number. This is the actual number of the histogram. So that's how you can tell, as well as by looking over here on your MACD indicator. But with all that coming together, we have a valid opportunity here where I would go ahead and place a trade to the short side, stop loss above the swing highs here, since we have a short trade, and Short just means selling, by the way, if you're brand new. So as we have a selling trade, stops go above the swing high instead of below the swing low. With that 1.4 to 1 target, which is what I like personally, we can see that price eventually pushes down and does, in fact, hit targets. Now, for me, this went on to prove to be a profitable strategy. And before I get ahead of myself, I actually got this strategy, or a very large portion of this strategy, from another YouTube channel. So I'm going to give props where props are due. I believe the channel name is Pro Trade, or either Trade Pro. I'll try to put a screenshot on the screen of their channel. So go over there, check out, I think it's Trade Pro. Go check out Trade Pro. They have a lot of really cool strategies on, or I think it's just one guy, but he has a lot of cool strategies on his channel. So feel free to go check them out. A lot of the strategy you just saw came from that channel, but it's something I've been testing myself, and it's actually provided pretty decent results, like here on the pound dollar 4-hour chart. As you can see, my testing results here are about a little bit above a 50% chance to win. Alongside that 50% chance to win, I also have about a 1.4 to 1 reward to risk ratio. So anytime you can get above a 50% chance to win and have more than a 1-to-1 reward to risk ratio, you have what we know as a profitable trading scenario, 50% or above. I think I got like 53% on this specific currency pair. And that's what we're looking for in order to give ourselves an edge in the market. Remember, if you would like to join us in the EAP training program, you can go to www.eaptrainingprogram.com. The link is in the description, and that should be on the screen somewhere as well. And also, before I let you go, please remember that having a strategy or knowing what the MACD is, how it works, and how to use it will not provide you with a profitable trading career. You must master what I call the triangle of trading success if you ever hope to be profitable. Imagine this triangle and imagine all the traders that are making money from trading, everywhere from Warren Buffett to the retail trader in his mom's basement that's just now starting out, but he has become profitable. All of these profitable traders have these three things in common. They have found a strategy that makes money over time. As I said, something with above a 50% win rate and a higher than 1-to-1 reward to risk ratio. If you can consistently do that, you will be profitable in terms of your strategy, but that doesn't mean you will be profitable if you don't understand risk management. Then this could lead to you blowing your account. Why, you might ask? Because even with a strategy that makes money over time, you're going to have things like losing streaks and drawdowns, and if you're risking upwards of 5 to 10% of your account, that drawdown, that losing streak, will either be too much for you to emotionally handle and continue trading the strategy, or could possibly, if you're upper end on the spectrum of risk, if you're at 10% and you have 10 losing trades in a row, not likely, but possible, then you could just blow your entire account in a losing streak without realizing that risk management could have made you a profitable trader. And even though you blew your account because you were risking too much, if you were risking 2% or less on your trades over the course of a long period of time, you could have been profitable. On top of risk management, we also have to study and master trading psychology or discipline. That way we can stick to this strategy, because if you have a strategy like we discussed that's rules-based and that provides an edge over the market, but instead of sticking to that strategy, you're out here watching tons of different YouTube videos and trying every strategy that you learn or that someone else is using, or you're just randomly placing trades because you have FOMO, fear of missing out, and you want to be involved in the market. If you're doing those things, then this is where you need to focus your work, is on trading psychology and discipline. Read books, watch videos about trading psychology, understand that trading comes with wins and losses, and understand that trading is a battle of statistics and emotion. But if you can take the emotion out, trading is just based on statistics. We're just looking to have a way of making money over a long period of time. We're looking to place trades in a consistent way that provide a money-making edge over markets. It's going to be my final lesson of this video. If you enjoyed it, please remember to go ahead and click that like button and subscribe. Go ahead and comment if you made it to the end, and I'll catch you guys in the next video. Talk soon.